especially when you're talking about gross amounts of money. My core belief is that people are bad. And so maybe it should be someone's job somewhere to detect fraud. Hello and welcome to Off the Books. We surf the uncharted waters of accounting, finance, risk, wherever else waves take us. This episode is brought to you by Workiva, the only platform that unifies financial reporting, ESG, audit, and risk, and brings you the hottest details of the hottest scandals around the globe. Check it out at workiva.com/podcast. My name is Mike Gravano. I'm an Off the Books producer, covering cherry Coke addict, and today's host. Forward to debating a great conversation today. Very glad to have you hanging 10 with us. With me, as always, are our two lovely co-hosts. Please introduce yourselves. Catherine, let's start with you.
I'm Catherine Tsai. I'm not an accountant, but I am a professional asker of questions. My drink of choice is a venti soy chai, and I'm happy to be here today.
And I am Steve Soder, accounting enthusiast and Diet Coke aficionado. Always looking forward to debating great conversations, and I'm so excited to be recording from the top secret Off the Books bunker, long rumored to exist, although never proven, except by the three of us.
We're doing the test run just in case when everything, say, I don't know, evil corporation such them the power, we still have our off-grid power.
That's right.
To the bunker.
That's right.
It is, of course, longtime listeners will know if I'm hosting, it is a movie show. We're continuing our accounting movies exploration, this time with two movies, and they happen to be documentaries, not dramatic films. We're talking about the 2005 film tackling the Enron scandal, Enron Smartest Guys in the Room, and 2017's All the Queen's Horses, which tells the story of Rita Crundwell, the perpetrator of the largest case of municipal fraud in American history.
Is that true in all American history?
I think so.
That's what the movie said.
Goodness.
That's what the movie said.
At least for Illinois.
Wikipedia says.
Are we trusting Wikipedia now?
Before we dive in, for listeners who aren't in the know, let's break down each film. This is going to be a different movie episode because we're not going to talk about like the quality of acting. Or is it an accounting movie? Let's get that out of the way. These are both definitely accounting.
Yes.
Solidly.
So what is Smartest Guys in the Room about? And Steve, if you may.
Sure.
What happened?
I think Enron is really just a story of hubris and greed and people trying to outsmart each other. Basically, the fraud at Enron, if you could really sum it up, is you generate a bunch of fake earnings, and we could talk about mark-to-market and kind of what that was all about. But even though you've generated those fake earnings and your income statement looks great, at some point you need cash to actually pay your bills. So while the earnings were fake, there were side deals and off-balance sheet arrangements between Enron and its own executives who were raising money off-balance sheet. Again, it wasn't on the financial statements, and basically going deeper and deeper and deeper in debt, but doing it in such a way that that debt wasn't visible in the financial statements because, again, your earnings look great, but hey, where's the cash? Oh, you're doing these shady side deals in order to generate the cash, and at some point, that house of cards basically fell down, and then the question is, okay, where was the oversight by the executives, auditors, attorneys, and everybody else?
Right.
That's how I would sum up Enron.
No, I think, yeah, that was great.
Okay.
Catherine, All the Queen's Horses.
Yeah, well, Steve, you mentioned oversight, and that's a big question for All the Queen's Horses, which talks about municipal fraud in Dixon, Illinois, and how that even happened. Lots of questions from that one.
Yeah, for sure. I mean, basically, you've got this, 20-year treasurer for the city of Dixon, created this kind of side account that if you just looked at the name of it, it would look like an official account, but it really wasn't. It was controlled by the treasurer, and it was really simple fraud in that case, basically creating fake invoices that the city would pay to that account. Again, that wasn't a city account, that was her account, so she could then take the cash from those invoice payments and then use it to fund this lavish horse-showing lifestyle with a $2 million motor home, motor coach.
And a total of $53 million taken over 20 years.
Yeah, crazy.
And she had 400 show horses. And through that one, everybody was always like, she has a lot of money for somebody in this town. It must be from a dead boyfriend or something. Everybody had their own idea. It's so clear that one is such small town, and I don't want to be a coastal elite looking down on small town middle America, but it just feels like a small town, people being like, we're all trusting and we're all just friends here. So there's no way somebody would be screwing over our town as literal holes are in our streets and we can't afford ambulances anymore. Nobody would do that to our small town.
Yeah, never. Well, and not to like jump straight to the punchline, but I think there's actually a lot of similarities between I mean, although one was dramatically more simpler, which would be Rita Crundwell and Dixon, but I think that there was a lot of similarities between both the frauds, which is people trusting, people assuming, oh, that person's really smart or that person's really experienced. They would never do this. Or, of course, there's got to be something behind the scenes that I'm just not seeing. I actually feel like that's a very common element in a lot of what I think we're going to talk about oversight and controls. And you see something that's weird, but, why doesn't that end up revealing what was going on behind the scenes?
What both movies remind me of is there's the David Fincher remake, Girl with the Dragon Tattoo. And I'm going to spoil that movie. So if you don't want that movie spoiled, jump to a minute. And if you guys haven't seen it, sorry. The murderer at the end has gotten Daniel Craig at his house. And he's like, you knew I was going to kill you. You put it all together. But you're here because you didn't want to seem impolite. And so much of human behavior is because we don't want to seem impolite. And I definitely think when there's whether it's small town and Friends or with Enron, there's a hierarchy there. I think you're like, that seems sketchy, but it's not my place to ask what's going on. And I do think manipulators definitely lean on that.
Well, and I think what was unique also about Enron is that when it comes to sort of like the letter of the rules, and experts in Enron would probably argue this case, but what I would say is that for the most part, Enron pushed the envelope as far as they possibly could by getting like SEC approval on mark-to-market, getting, auditor and attorney sign-off on these side deals. I mean, there's a point you could make that said, well, technically, Enron wasn't doing really anything wrong according to, like, the rules as they are written. But there's a really big argument that makes, but yeah, even if it wasn't, clearly that's unethical, clearly that's immoral, and there's a piece of that, too. With Rita Crumwell, obviously that was unethical, immoral. You just have people who weren't, like, literally doing their job, like, at all, and I guess we can get into that.
Yeah. Yeah, we can dig in that one because it's a little more simple. Rita, there is an auditor. They just clearly weren't auditing. And then you also found out some of the members of that audit team were also her personal tax attorneys.
And they were basically doing the accounting for the city itself, which ultimately means they're auditing their own work. I mean, that is like a massive red flag, huge no-no. You certainly can't do that in corporate America, like not at all.
Post Enron.
Yeah.
Right? We got Sarbanes-Oxley because of that. And this is going to be my barely understanding what happened. So a couple big companies messed up huge. Then we got SOX. You're not supposed to have oversight over your own work, which is good. So how did Rita get away with it? Is it because that's just for corporate America and they didn't count, so it's okay that the auditors were auditing themselves?
Well, a bunch of things there. I think, first of all, Rita's fraud started before Sarbanes-Oxley. Sarbanes-Oxley also only applies to public companies. Is that right?
Yes.
And then I think Kelly Richmond Pope, who worked on All the Queen's Horses, would point out that the auditor's role isn't necessarily to find fraud. It doesn't sound like the state auditor's job was to actually go back and look at the city's results and say whether they were 100% correct.
There's certainly a difference between expectations and even rules governing audits for publicly traded companies and then like governments and public sector stuff. That's probably a bit of minutia, but I mean, I think just for, the geeks out there, we probably had to just like clarify that. I think the most important issue is to take a step back and really understand what is the purpose of an audit. We've got other guests on Off the Books who'd probably be a little better suited than I am to address that, but an audit is not meant to say this is 100% correct, 100% accurate. All of the processes that contributed to these financial statements are like, robust and everything's great. Really what it's to say is that, hey, within a material respect, and however you define materiality, I think everybody agrees that if the financial statements were off by a penny, nobody's going to care, right? That doesn't change anybody's opinion about the financial statements themselves. Now, materiality for most cases is a lot bigger than a penny, but what an auditor is really meant to do for purpose of financial statement audit is to say, hey, within material respect, these financial statements are representative of what happened. And so there is an argument to be made that's like, well, an audit really isn't designed to detect fraud. However, speaking back to publicly traded companies and Sarbanes-Oxley, what they did do is go back and say, okay, you know what? Because an audit itself, financial statement audit, isn't designed to detect fraud, what we need to do is ensure more robust processes, more independence, more review, more of the rigor, so that there is a higher likelihood that error, whether due to fraud or some other reasons or mistakes, that is likely to be detected before it makes its way all the way to the financial statements. And there's other things that came from Sarbanes-Oxley as well. But I feel like that point is so important because I agree. I think Kelly Richmond Pope would say exactly that. Hey, the auditors clearly weren't doing their job, but just to be clear, the audit was not designed in order to detect fraud.
My question there is why? Why isn't it somebody's job to detect fraud? Because especially when you're talking about gross amounts of money, my core belief is that people are bad. And so maybe it should be someone's job somewhere to detect fraud.
Well, and an add-on question to yours, Mike, is also when the auditors were looking at the city of Dixon, why didn't they pick up the internal controls that are lax in the city of Dixon? Why does Rita, one person, have control over so many different processes, from picking up the mail to see the invoices, from paying and making the deposits, signing the checks? Why was that all given to just one person? Why were there no checks and balances?
And they weren't doing their job because the documentary did a great job of like, here's how an invoice should look, and here's what Rita's invoices look like.
Oh yeah, with like
it was missing so many things. So even if your job is
misspelled, right?
Yes.
Like yes,
So,
on the fake invoices.
That's when it's like, okay, so there is rubber stamping going on.
Well, so I think that when it comes to Rita Cronwell, forget about anything new that came from Enron or Sarbanes-Oxley, like that was a massive failure. The expectations of both an auditor as well as, an accounting department would never have been okay with that had they decided to look or they decided to say something. And so to me, it's a little bit different to equate, hey, SOX should have detected and changed best practices previous to SOX, like back when she was doing this in the 90s, should have prevented. I just think you had auditors who literally were doing a terrible job, which is why there was a lawsuit, and at least in near as we can tell, it sounds like there was some kind of settlement or something like that was paid. But you ask a really good question. Why aren't there people there to detect fraud? And the answer is now, I think there are, to the best they can. Fraud, particularly when you have collusion, when you have two people that say, okay, well, Mike's our producer, but it's me and Catherine. Say, hey, you know what, Catherine, we're going to work together and we're going to somehow try to defraud Mike. If you think about okay, let's separate the person who is picking up the mail from the person who is making the deposits from the person who is, writing the checks. If all those three people are separate, then in theory, that should be a nice check and balance to prevent something like fraud. But what if all three of them behind the scenes are literally working together? It's like, okay, I'm going to pick the mail. I'm going to hang you the check. You're going to take it, deposit in this account. We're all going to do that together. And again, that makes it really, really difficult for typical standard accounting processes to do that. And so you have all these other sort of controls that go around it, which is like review and oversight and executive sign-off and even a whistleblower and all those other things to try to help penetrate that. But to be clear, when you have collusion, it just makes it almost not quite impossible. And again, other people can argue with me, but I feel like that's part of why, man, can you just do this one thing to detect fraud? And the answer is no. But there's a lot of other things that you can do surrounding that would help.
And that's what was so interesting about the Enron case is you had Andy Fastow,
CFO,
was doing his thing of we're going to make shell corporations and hide our debt in there. And then I'm like, well, don't they have to pay taxes? But so it's he's playing his little shell game, hiding all their debt. And then you have Skelling being like, oh, we're going to buy this power plant, and then we're going to sell power while we own power. That feels very monopolistic. And so he's in there. He's like, all right, so we're going to do rolling blackouts, and we're going to crank the money up so our traders can make more money. It felt like they were doing so many different terrible things that it compounded upon each other. So it wasn't even collusion of oh, let's all make this one plan. I guess the one plan is to line their pockets, but they were doing so many gross things to make money that it's whack-a-mole of fraud at that point.
Oh yeah, for sure. I mean, I think that with Skilling, there was when mark to market got approved, and basically,
thank you.
Yes.
What does that mean?
Okay, and I knew you were going to ask that question. So really, the right way to think about it is that when you look at a set of financial statements, and actually our recurring guest, Nick Mazing, has jabbed me about this before, which is hey, accounting is fiction. When you look at the financial statements, that doesn't actually tell you what the real value is of the company because most of the numbers on that balance sheet are historical. It was something time. Like, you bought a house like 20 years ago. Well, it's probably minimum doubled in price since then, probably multiple times over. But if I had that same house on my financial statements, other than depreciation, some other things, it's basically carried, at its historical cost indefinitely. And so what mark to market did is it said, hey, for these assets, you can actually adjust those for the current fair value, or in some cases, your calculation of the expectation of the future value. And so what happened is that as Jeff Skilling and the crew at Enron got really, really creative at these different transactions, like, well, if we do this deal, which we haven't done yet, but if we do this deal and these projections carry out, here's what that's going to be worth to us. We're going to recognize all of that right now today.
Which, that seems so right for manipulation.
Yeah, no shit. I shouldn't talk like that. It's duh.
Well, yeah.
Is there ever a legit reason, though, to use it?
Yeah, 100%. And actually, from a personal standpoint, so I used to work at one of the largest loan originator and servicers, mortgage loans in the country, and you would actually have to carry those loans at fair value. It has to be used mark to market. And I'll be super honest with you, that was one of the most stressful parts of our job, is like looking at the assumptions that go into like future interest rate curves, and there's a million things that go into it, and you hire experts that helps you do that. And what happens is that you can end up getting on this treadmill for those people who were aggressive about it. We weren't, but for those aggressive about it, because just think about it. You get really, really aggressive, and you lock in, I say that in air quotes. You kind of bring in all of those gains right now today. But you have to grow earnings, which means that the next time, the next quarter, the next year, whatever, well, now not only do I have to like do what I did the previous quarter, now I actually have to find something new in order to bring that in and continue to increase it. So one of the fallouts actually of Enron that nobody ever talks about, everybody talks about SOX, but it was actually changes to the mark-to-market accounting rules in order to put some guardrails around that for when you can and can't use it, and actually how do you qualify for it. I mean, they were talking about assets, potential asset sales, and so forth. You would never have marked those things to fair value, like ever.
And one of the case studies they showed that they did was nobody wanted to own a power plant in India.
Right.
And they're like, we're going to do it, and we're projecting billions of dollars of profit. And the people who did speak up were like, there's a reason nobody's doing this. And they were like, well, people are jealous.
People just aren't smart enough.
It's smoke and mirrors. And the government, the rest of the industry, people are like, yeah, I guess we'll believe Enron. They call themselves the smartest guys in the room. Who are we to say they're not? People are jealous. And in All the Queen's Horses case, it felt similar, where another town, years before it all came to light, another town was like, hey, we're doing great and you're not. Look into that because there's a reason. And Dixon went, no, they're another town. Why would we listen to them? And so it is this weird like smoke and mirrors, and like I feel like it's a lot of social manipulation to help all of this happen, even when it's kind of almost in broad daylight what's happening.
It does take someone to ask the question, and then it does take someone to be persistent enough to get the answers.
Yes.
If you get a phony answer or a shaky answer, it takes someone to keep asking questions.
Ask why.
Ask why.
Which, man, some great company had that as their slogan.
For those who haven't seen Smartest Guys in the Room, that was Enron's tagline.
How is a financial reporting team better than a dad joke? A dad joke can tell you what to call a busy accounting leader, but it's not going to tell you why. Really good financial reporting teams can pull together reports that tell you what happened last month and even tell you why. They just don't always have the time to get to the why. That's where Workiva comes in. Top accounting and finance teams are using the Workiva platform to automate financial reporting, from financial statements to board reports, from 10Qs to S1s. Spend less time copying and pasting numbers and more time telling the story behind the numbers with data your auditors can trust. See why accounting and finance teams love Workiva at workiva.com/accounting. That's WORKIVA.com/accounting.
Speaking of taglines, isn't Dixon, Illinois, where Ronald Reagan was from, and one of his catchphrases was trust but verify?
Yes. But it's the Rita Cromwell, it's like, she did it, and then some people were kind of bad at their job and too trusting. Versus Enron, the lore kind of, unless you know all about it, is like, look at this terrible C-suite. Look at these high-ups and what they did. But in the movie, we hear recordings of the traders who are like, are much lower than the C-suite, and they're dirt bags.
Yeah, well, because they were compensated. That again, I go back to hubris being the cause, I think, of Enron, or at least one of the really big cause, and that hubris was actually ingrained into the culture to where you wanted traders to be super, super aggressive, right? Like California is literally on fire, and they are taking as full advantage of that as they possibly can. And now, you know what? In a free market economy, you would actually expect that to happen. But again, it goes back to, okay, even though the letter of the law is such that, like, yeah, I guess this is okay, there's ethical and moral considerations that really ought to, like, ground or at least envelop that to be like, hey, you know what, even though we can, that doesn't necessarily mean we should.
And that's, the letter of the law versus the spirit of the law. And somebody like, I've been called a cynic. I think I'm a realist. Maybe we should not just assume the market and individuals will do what's right. That's where my stance is, because historically, time and time again, that's blown up in our face. It's never been like, we don't have to really watch out and everything goes smoothly and great. If it seems like that, it means the fraud has not been caught yet.
Yeah.
I wonder what the fraudsters would say, too, if they've learned anything, because some of these people are out of jail now.
Here's an interesting question on that. Do you think that there's a difference between Rita Crunwell getting out of jail and Jeffrey Skilling, who was also recently released? I say recent, maybe the last 5 years, something like that. Do you think there's a difference between the two? Because to me, like, Rita's like black and white, no question. Hey, you know what? You took advantage, and I guess lucky for you that, netted you like $53 million. I think Jeff Skilling would actually argue, like, you know what? The systems were such that we were incentivized to be as aggressive as we could. We paid a lot of money for accountants and attorneys to approve and tell us the work that we were doing is okay. And we even had the SEC, at least in the case of mark-to-market accounting, actually approve what we did. Hey, I'm a product of a system that was incentivizing me to get super aggressive. And I'm not justifying Jeff Skilling, right? But you wonder, like, could he make a reasonable argument? I don't think Rita could. Jeff Skilling?
Right.
Maybe.
I think he would and could, like, based on his Cheshire Cat grin throughout. Like, he at no point was like, this is messed up. He's greedy. They were selling the shares while telling their employees to buy shares in Enron. Like, so yes, again, it's letter of the law. Sure, bud. But everything you were doing was wrong, and you were manipulating the levers that you had at every chance as well, even if you're like, the system encouraged me to do it.
Right. I think that's what FASTA would probably say, too, is even if something is legal, how do we teach people to do what is right, or how do we teach people ethics, essentially?
And to go full circle, while, you can't legislate ethics, Sarbanes-Oxley, the whole point of that was to put in systems of control and review and accountability to basically change those incentives, to put the kind of process in place that would incentivize somebody to raise their hand or would encourage an auditor to say, hey, look, this process is messed up. You have the same person opening the mail, receiving the checks, writing the checks, all of that. SOX was meant to kind of put some guardrails around that.
Which is why, and I know SOX did part of this, is like the independent auditors, it feels so important, and that if you're an auditing a company, like, you can't then go work for that company and vice versa, right? Work for the audit firm. Like, there's a buffer of years.
Yeah. There's a little bit. I think the biggest point there is that you would never want auditors, again, auditing their own work. So let's say, for example, Enron went to their then auditors, Arthur Andersen, and say, hey, we want to keep as much debt off of our balance sheet as possible, so figure out how to do that. And they're like, okay, cool. Like, here's how you got to do it, blah, blah, blah. I actually suspect this is probably what kind of really happened between Andersen and the Enron attorneys. And then they came back and said, okay, here's this vehicle, here's the way you can do it. And then, oh, okay, hey, and when we go to audit this, like, you're going to sign off on this, right? Like you're good with that? Like, yeah, no, we're totally good. We've already looked at it. It's probably the easiest part of the audit because they were the ones that helped put it together.
It felt like Arthur Andersen got away pretty lightly in the doc. And it's a vast story. You could make like a 10-hour miniseries about everything that was happening. But it was just like towards the end, they're like, and they're shut down because they messed up. But like, it was clearly there's more collusion and more under the table, at least laziness.
Just it destroyed an entire firm. It was the oldest accounting firm in the U.S., and just evaporate. Interestingly enough, though, this was years after. Hopefully I'm remembering this correctly. The obstruction of justice charges got dropped. Now, reputationally, and of course, 10 years later, when the firm has disappeared, you're obviously not going to come back from that. But those charges were dropped.
So thinking out loud here, I want to try to tie it to like a current day situation. Let's say there's a situation where you don't have black and white rules about what is legal and what's not legal. So, for example, Bitcoin or cryptocurrency. What do you do if there are no clear rules? How do you manage risk in that situation? How do you follow the letter of the law, even if it sounds like what you're doing may not eventually be legal?
You're both looking at me. I don't know if I have a great answer.
Teach us, Steve.
Well, here's a couple of things. First, let me just say that's actually what boards are really supposed to be doing. Boards and chief risk officers and others, but that's the governance structure that should exist to at least be asking the types of questions of, hey, you know what? What's the thought process? What's the thought process behind this? What are the negative externalities? And probably most importantly, how is this going to be perceived? I mean, I can't remember if it was an accounting professor or somebody at a company that I worked at, but we were debating and discussing that very question, and his response, I'm going to not sum it up exactly the same way, but it's like, well, just take whatever it is that you're doing, assume that gets published on the front page of a newspaper, and if the general public reads that and be like, yeah, okay, that makes sense, then you know what? Maybe you're not 100% like okay ethically, but you're probably okay. But if there's going to be like this massive pushback, this massive backlash or whatever about what you're doing, okay, that's probably an indication that something's wrong.
I think it's interesting because the question you seem to ask, Catherine, is what can the individual do to manage the risk? Versus, to me, it seems the people in that scenario aren't worried about managing the risk. They are trying to get what they can while they can and burn the bridge behind them. And so it is like societally, or what can some sort of supervisory element like a board do to manage the risk. And then that's, to me, it is connected that you shouldn't audit your own work. When a board member is also the CEO, that also feels like maybe these are two different roles that should be separated.
Yeah. I mean, boards need to have a certain number of independent directors, meaning that they're not tied to the operation. What I would say is, at least for the individuals, that's where you have things like the SEC's whistleblower program. I mean, if anybody's been paying attention, they have been paying out hundreds of millions of dollars to whistleblowers who are willing to raise their hand. And that actually helps create that incentive. Because if you think about a whistleblower, it's like, okay, you know what? If I say something, I will probably lose my job, and I may be ostracized from at least, maybe that market or that industry or whatever it is. But boy, if I've got this like strong, powerful tens or hundreds of millions of dollars potentially in an incentive from the SEC, yeah, you bet. And you bet I'm going to honestly pick up the phone and just see if I can get some money.
Yeah, because even if it is the right thing, it is going to blow up your life. Because so many of us, our jobs, our friends, are like, people will be pissed, even if they're like, well, what you did was right, but now none of us have jobs because the company's so yeah, it makes sense to have a big incentive.
We had a conversation with Sharon Watkins, the Enron whistleblower. This was at an SEC Pro Group event, and one of the things that I distinctly remember is her basically saying, hey, you know what? I'm known as the whistleblower for Enron, but back then, none of the incentives or the whistleblower programs that exist today existed back then. She's like, I haven't been gainfully employed really since Enron. I mean, and she... Well, yeah, she's done books and she speaks and whatever, and presumably, hopefully, like, she's doing okay financially. But you think about that, like, hey, that literally, at least up to this point, totally cost her career.
Because I bet so many companies are like, that's great that she did that. Nah, but I don't want that in my house. What are there, like, these two docs, different kinds of fraud, but what are potential cases of fraud? SOX doesn't cover that, like, the powers that be need to keep their eyes on. What do we think future fraud is? Not to give our listeners
ideas.
Is there even a way, or is it always going to be like human greed finds a way, and it's always, when you drill down enough, it's kind of the same thing every time? It's just, what are the new levers?
I think we actually go back to the Rita Crundwell kind of stuff that's way simpler, almost stupidly simple, and then as a fraudster, you're kind of rolling the dice to hope that, nobody notices or nobody catches you.
Which has to be part of it. The way she named her horses, was rubbing it in her town's face. Like, she might have well said, I stole this money from 7th Street. Like,
Yeah.
it was crazy. And I think that the thrill of it has to be part of it.
Oh, sure.
We have 4 awards this time.
Okay.
Instead of our normal 3. And they are going to be different because we can't say, like, best actor. So I would like to say best accounting moment in each movie.
Mike, you go first.
Okay. In All the Queen's Horses, it's kind of the moment that kicks off the story, is the woman who worked with Rita for 20 years, whose name is escaping me.
Kathy Swanson?
Kathy, thank you. But she happened to work late. She happened to look at a document Rita told her she never needed to look at, and was instantly like, hey, this is wrong. Like, very quickly, like, it felt like accounting 101 in freshman college. Like, she's like, that's wrong. And I was just like, that's, heck yeah, Kathy. And then she instantly was like, I'm going to go take this to the mayor because something seems sketchy. And so then I was like, accounting.
Yeah. Well, you know what? I would actually take basically the same thing, the equivalent, but for Enron, which was when Sharon Watkins says, hey, Jeff Skilling was gone, or maybe it was Andy Fastow, I can't remember, but now I'm looking through this information, and I remember she said, like, accounting is just not that clever, like, something doesn't seem right here. That's what ultimately led her to write that letter to Ken Lay, but again, it was that thing like, hey, accountant is the hero, I'm looking at something, this doesn't seem right, I'm just going to kind of raise my hand and just ask the question, and, that sort of avalanches, right, everything behind it.
My favorite accounting moment would be from Smartest Guys in the Room. It's from an earlier fraud, actually, when they looked through the accounting and discovered a phony name of Mr. M. Yes.
Oh, that was the Valhalla scandal. We didn't really talk about that. Yeah, M. Yes.
Next is moment that made you angriest in each movie. So you can do 2. One for, I can go first if you guys need to think, is in All the Queen's Horses, it was highlighting she made this much money to get a motor coach, and now this town can't have an ambulance. Because you can see, like, a direct line to, humans will suffer because of what you're doing. And then Enron, I was angry the whole time. But I think it was towards the end. It's how much money each of the guys were walking away with and still got bonuses. And are probably still fine. Even if they went to jail, I bet they're fine. I bet they hid it away in a Cayman's Island thing right before they went to jail.
Yeah, I was wondering about that. Like Andy Fastow, for example, I think his number was $40 or $50 million that he took from his side deals. And I do remember distinctly in the documentary, I think he was only required to pay 20-something million of restitution. Maybe he spent, I have no idea, but that seems a little bit, and that's actually quite different from Rita. Rita stole $53 million, so she was required to pay that back. But then it's like punitive damages, or whatever you call it. It was actually that times 2, right? So it's a total of like 106 or 104 or whatever the number is. No, the thing that the one that I struggled with the most was actually the electricians, the linemen of PG&E. That was a traditional electric utility that Enron bought. So you had, people who were basically like municipal workers for a big chunk of their careers. Then they're owned by a private company, put money away in the 401k, all of that. And I remember the guy was like, hey, you know what? I had a bunch of Enron shares at $32 per share. We were frozen out of our accounts. And I ended up selling it for, I think I got pennies on the share. I think the number was I had $340,000 in my 401k. By the time I was able to actually access it, I sold it for $1,200. That's life-changing stuff for, for I'd say like a blue-collar worker that now may be working into their 70s or as long as they're physically able to. That's horrific.
Yeah, in both documentaries, I think the most frustrating moments are when the directors juxtapose what the effects are for the fraudsters versus the ordinary people. So in the city of Dixon, Illinois, I think there was one moment where there was a graphic and it showed how much money Rita stole was more than what the city's budget even was. And then in Smartest Guys in the Room, where they show how much the executives were compensated, but then how much the workers lost from their retirement accounts.
Yeah.
So hard to hear.
Better fraud. Which of the 2 stories, which was the better fraud?
How are we defining better?
I guess the fraudiest fraudster. Because, it's not, better's the wrong word. But who's
Most worstest.
Most worstest. See, that is different to me. So I think the most worstest is probably Enron, but I think the better fraud is Rita because she got away with it for so damn long because I think she kept it simple-ish.
See, and I would actually say the opposite. The old George Costanza line, like, it's not a lie if you believe it. I really think deep down in their heart of hearts, Fastow, Skilling, just, total scumbags, knew what they were doing. But to me, the best fraud is one that, well, hey, you know what? These are the rules. Here's what I did. It seems to comply. You tell me this is wrong. That, I think, is the most interesting little bit of it. And the fact that they were... again, you had all these earnings that were pumped up, inflated, okay, but where's the cash? So then, Andy Fastow, crooked CFO, runs to the rescue, does these side deals, generates the cash. I don't actually think Fastow and Skilling were actually, planning this whole thing out. I think it was a set of circumstances well, the earnings look good, but now we got a cash problem, and Andy runs in and says, okay, I'll be the hero, I'll kind of try to solve it. I don't know if that makes it better. Makes it more interesting, at least.
Certainly sounds more complex.
Where are you landing?
Well, maybe it has to be Rita because it went on for 20 years.
Yeah, it's just
20 plus.
Yeah.
And now, finally, better movie.
Oh, Smartest Guys in the Room. Yeah, I'll be.
So?
Yeah, I'll be candid. When we were watching, I'm going to confess that. So we actually watched together as a podcast crew. All the Queen's Horses. What's that?
In the bunker.
In the bunker. That's right. Here we were, safe and secure from Armageddon. Maybe it's because it was late during last night, so I got a little bit tired. I could watch Smartest Guys in the Room all day, every day. Good music, the graphics, it jumps around.
Their music. There was a lot of needle drops.
There was a lot.
Catherine?
I will say All the Queen's Horses because it felt very relatable. This could happen in my town.
Oh, good point.
And I think, while I do love the needle drops and Smartest Guys in the Room, it did make me more emotional at a visceral level. I think All the Queen's Horses starts faster for me. It took me a while to get into Smartest Guys in the Room. The first half hour, I was like, what? And All the Queen's Horses, I was just like, I'm in. Cool.
Yeah. You know what? And that's actually one of the things that I didn't expect about All the Queen's Horses. They jumped to the fraud quick, right?
Whatever. They were both great. I would say, listeners, even if you're not into accounting, which is so weird that you're listening to this podcast.
No, it's not weird. Thank you.
Well, thank you.
Thank you.
I'm fascinated by you. And yes, big thanks to you, dear listener, for serving along with us. Big thanks to Captain Science Steve Soder. This has been Off the Books, presented by Workiva. We will be back in the future to determine the best accounting movie of all time. We have gone through all of our films.
That's right. We have gone through the whole bracket.
What a whirlwind journey over a year and a half or 2 years it's been.
I think 2.
Please subscribe, leave a review, tell your buddies if you like the show, sound off in the comments if you're watching on YouTube, and if you disagree with, or maybe if you've worked for...
Yeah, bring it. I want to hear it.
Yeah.
Yes.
Maybe you're more people should commit fraud. Let us know.
We may let you in the bunker for that conversation.
Sure. Drop us a line at offthebooks@workiva.com. Surf's up. See you in the next wave.